couple of things are being cited, Michael. And I mean, obviously, when the Fed says it's going to maybe taper more quickly or become less accommodative more quickly, one of the whole reasons people love crypto is because or Bitcoin. There's only 21 million, so you need central bankers to keep debasing currencies for Bitcoin to make a lot of sense. Is that enough to start the selling that we saw last week?
Well, I think, Joe, there's really no stranger in the crypto ecosystem to volatility. I think the ecosystem knows it. I think investors know it. You know, waking up to a move where Bitcoin is down maybe 20%, I believe this is about the fifth or sixth drawdown of that magnitude we've seen alone in 2021. And so investors know that this comes with the territory. I would say, though, that it's less about price movements and more about how investors' attitudes are changing. Today, we just released our third annual investor study around Bitcoin and examining those attitudes. And I think now the study shows that over half of investors surveyed are thinking about Bitcoin as a long-term investment. And we've also seen a big uptick in female investors as well as more mature investors, 55 to 64, investing in the asset class now.
The idea that there was some positions being unwound in terms of leverage. What do you know about that? Was it on derivatives related to Bitcoin, or as Andrew was pointing out, was it other places where you can just leverage the hell out of just physical Bitcoin? And was that a big reason for such a quick, violent drop?
Yeah, we've seen this before where there's a lot of leverage in the system that does quickly get unwound. I believe this weekend there was over $1 billion of liquidations that occurred, and there are still places within the crypto ecosystem where you can get outsized leverage on Bitcoin trades. And so that does certainly lead to some volatility when you do start seeing, dramatic movements in price.
You're so nice in talking about it. And I guess you're used to it. It leads to some volatility. I mean, people aren't used to, if you bought it at 65,000 and you woke up Saturday morning and you saw it at 42,000, that's not your grandfather's, CD and no one expects it to be that. But that's even rare to see in even the most, volatile segments of technology or small caps or whatever. I mean, those are big moves, Michael. You're used to it, and it's something we need to embrace.
I think so. Investors know that it comes with the territory. I mean, whether it was the number of drawdowns we've seen in 2021 or just zooming out over a longer time horizon, you do see the price continue to kind of have these series of bubbles and bursts where the price moves dramatically. You see a pullback, it bases, and then continues to move on to, take on new all-time highs. Now, obviously, if I had a crystal ball, I could say with some assurity that the price would continue moving upwards. But I think what investors certainly know is that if they can't stomach the volatility, it's probably not the right place for them to be investing.
So I guess then the question is from here, if you are going to add, if you're going to stack, when would you'd stack right now? You'd be buying right now. You'd spend 40, like El Salvador bought 150 at 48 and change. Would you do that?
I think most investors, at least the behaviors we see at Grayscale, are using pullbacks in price to opportunistically average down on their positions. So especially as we think about institutional investors, the ability to dollar cost average into a position and again, think about it over a longer time horizon, they do often use these pullbacks to build those positions over time.
Shepard Smith here. Thanks for watching CNBC on YouTube.